For investors looking to broaden their stock portfolios, our guest says there are opportunities in value, dividend payers, and small caps, and a lot of them still trading at lower valuations compared with the mega cap techs. Let's get more from Whitney Stewart, Executive Director and Client Portfolio Manager at Sterling Capital. Great to see you, and thanks very much for joining us.
Good morning. And yes, we believe that this halo trade, heavy asset, low obsolescence, is pretty interesting. And you're seeing large cap value, dividend stocks, small cap stocks in the U.S. Up anywhere 5 to 9%, and the reversal of the winners of the last couple of years, Mag 7 technology trade. So we're seeing that as an attractive area on a go-forward basis.
Remind us, what are these halo stocks again?
Yeah, so heavy asset, low obsolescence. So some of those sectors are industrials, energy, utilities. In the AI space, one of the ways you can play it is the electric grid infrastructure. Yeah. So we like Southern, we like Eaton over long-term fundamental. Their backlog is very attractive, consistent cash flows. And they're not as expensive as some of the tech winners in the AI trade.
So Southern, the symbol SO on the NYSE, so it sells electricity? Is that its basic?
Yeah, yeah, exactly. It's a regulated utility.
Yeah.
So one way to think about it is a conservative way to play the demand for AI is going to drive a lot of electricity demand. It's based in the Southeast, so has very favorable demographics, population growth there. And then Eaton supplies transformers, circuit breakers to the electric grid, which needs to get upgraded anyway. And now you've got really attractive, strong demand from all these data centers being built. They're going to need a lot of power.
Yeah. It's interesting with the tension, it seems, south of the border, though, of our electricity prices that people feel are being pushed up by the data centers. But I guess that doesn't hurt the electricity utilities.
Yeah, so there's conversations about regulation. So that's another aspect of evaluating some of these companies. You want to identify the companies that have favorable potential regulation opportunities, because some of the local regulators and potentially national are concerned about how their prices for consumers may go up. So you do have to do the homework on that.
And then Eaton, I'm not sure if we looked at the stock chart, ETN. I mean, their order book must be just full to bursting right now.
It is very strong and accelerating. And so, typically stocks react really well to an acceleration. And their customers, have potentially hundreds of billions of dollars to spend on CapEx. All the big hyperscalers, Amazon, Microsoft, Google, Oracle, they have a lot of cash flow to build out the AI infrastructure. And ultimately, that leads to Eaton's backlog.
It is interesting, though. I know this is not a new theme, but companies like Meta and Alphabet, for years, people loved them because they didn't have to build factories and plants, but that's changed radically. They're having to build hard stuff on the ground.
Correct, yeah. And the stocks really worked for the last 2 or 3 years, even though they were spending more and more of their cash flow. The market seems to be, again, sort of taking a breather on the Mag 7/AI trade and broadening out. Again, U.S. value dividend stocks, also small caps, are up, 8, 9, 10%, depending on the index you're looking at. And they just have less tech. There's less risk. And then you're also seeing sort of the opposite of the software trade, which is sort of the disaster. And so small caps have less than 3% software.
That's interesting. Do you think, I know this is a bit off topic, but are people being too hard on these traditional software stocks?
I think it's going to be a stock picker's market. So that if you think about software, historically trades at a really high multiple. Let's just say ballpark 25 times earnings.
Because it's asset light.
Asset light. Yeah. It's highly reoccurring, super high margin business, great business. If all of a sudden the cost of software to develop it is extremely low and potentially disruptable, and these moats go away, then the multiple of these stocks probably should come down.
Yeah.
Now, some of them do have real moats. Some of them, those moats are getting eroded. And the two big competitors coming from the private world are Anthropic and OpenAI, and they have really high revenue targets. Anthropic is looking at close to $100 billion of revenue by 2029, and OpenAI just upped it from $100 billion to $280 billion. We'll see if they get there.
Yeah.
But if they get anywhere close to that, that revenue's got to come from somewhere. And so software profit pool is AI is really good at coding. So we'll see. They are growing fast. OpenAI just did $20 billion annualized revenue at the end of 2025. OpenAI,
Oh, yeah.
which is ChatGPT.
Yeah.
And 3 years ago, they had almost no revenue.
Yeah, so it is picking up.
Yeah.
You have a couple of retail ideas. BJ's Wholesale Club.
Yeah.
Just put them in perspective. Are they like a mini Costco?
Yeah, great question. A great way to think about large cap and small cap, where's the value? Everybody loves Costco. Phenomenal store. It's been a great stock. The one issue is trading at 55 times earnings.
Mm-hmm.
So BJ's is trading at 20 times earnings, and it has the same membership model, 90% reoccurring membership fees, which makes it real consistent. It's got the cheap gas, and yes, it does have the hot dog and a Pepsi for $1.50. Keeps you coming back, but you're only paying 20 times earnings, and the company's just a lot smaller. Very similar business model with, we think, actually a little bit more growth in the U.S. because there's less existing store base. Most of the stores in the Northeast, they're expanding Southeast, Florida, Texas, where there's more population growth anyway.
That's interesting. It's a mini Costco, arguably cheaper.
Correct. Yeah. In our view, yeah.
Thank you very much, Whitney.
Of course.
Whitney Stewart has been our guest. Whitney is Executive Director and Client Portfolio Manager at Sterling Capital.